Welcome back to the Moral Money Podcast, where we break down the complexities of decentralized finance and explore new ways to create a fair and equitable economy. Today, we're diving deep into the concept of mutual credit systems and why, despite their appeal, they have some fundamental flaws when it comes to scaling trust and value. But more importantly, we'll talk about how moral money addresses these issues, building a fairer, more reliable system that solves the problems mutual credit can't. So let's kick off by understanding mutual credit systems. These are cooperative models where participants' debts and credits are tied to one another in a closed loop. They work really well in small communities or tight-knit groups where there's a high level of trust. If I give you credit, you owe me, and the system balances itself out through everyone's mutual obligations. Now, this is a great system for small local trade where there's a shared goal and trust is naturally high. But as we scale it up, say to a national or global level, things start to break down. One of the biggest problems is the lack of a store of value. Here's why that's a problem. Every asset in the world, whether it's land, labor, or property, has a value. In the real world, these assets don't just stay locked in closed systems. They need to be traded or borrowed against. But mutual credit systems don't have the means to preserve or grow value over time. They're isolated. If you're trying to sell a house, for example, how do you do that in a system where value is based solely on the trust or credit of the participants without any external market validation? That's where moral money steps in with a solution. Unlike mutual credit systems, moral money is backed by real assets, property, land, things that inherently hold and grow value over time. We've built a currency system that's linked to appreciating assets. This means the value within the system is not just about trust between participants, but also about real-world, tangible assets that can interact with external markets. So even when you're operating within the moral money system, your currency holds value in the broader financial world. But there's another massive limitation in mutual credit systems: trust and creditworthiness. In a mutual credit system, everyone is treated the same. There's no inherent mechanism to differentiate between someone who's been a trustworthy lender for years and someone who's just joined. This works fine for small transactions, but for big investments like mortgages, forget it. You can't build an economy of trust debt on a system that doesn't recognize individual histories or reputations. With moral money, we've built in decentralized conflict resolution and trust mechanisms right into the backbone of the technology. What does that mean? It means we're tracking your past interactions, your trustworthiness, your reputation, just like a credit score in the traditional system, but without the centralized control. It's transparent, it's fair, and it allows people who have earned trust to access larger loans or investments. We're talking about a decentralized credit score that enables real financial interaction at scale. Let's talk about trade for a second. Another problem mutual credit systems face is trade imbalances. When two different mutual credit systems try to interact, there's no easy way to balance the scales. The systems are isolated, with no external liquidity to smooth out these imbalances. That's why trade or even collaboration between these systems is often clunky or downright impossible. Moral money has solved this by allowing controlled liquidity from fiat and other assets like Bitcoin. So now, we can inject liquidity into projects that are expected to be commercially successful while still keeping the system decentralized and backed by community-driven decisions. Projects are vetted, structured, and funded by income streams without the usual soft costs like agent fees or construction loans bogging things down. This liquidity brings balance while ensuring the system stays fair and grounded in real-world value. And here's where history becomes our teacher. We've seen isolated closed-loop systems before. Think of company towns during the Industrial Revolution. Workers were paid in company scrip, which was only redeemable within the company's ecosystem. This led to massive exploitation because there was no way for workers to use that currency outside of the company's control. Mutual credit systems risk falling into the same trap, isolating value and participants without a connection to the broader financial ecosystem. Moral money avoids this pitfall by keeping the system open to external trade and value. Our currency isn't limited to a walled garden. It's based on real-world assets that can be traded inside or outside the system. We've learned from the mistakes of history and designed a system that prevents exploitation while promoting fairness and trust. And finally, let's talk about trust, lending, and debt. In the real world, when we take on large debts like mortgages, we rely on trust, our credit score, our history, our ability to repay. Mutual credit systems don't have a built-in mechanism to assess that. Without that, you can't differentiate between someone who's reliable and someone who's risky. That's a huge problem if you want to scale up the system or take on big projects. Moral money recognizes our unique differences. It allows trust and reputation to build, much like a decentralized credit system. You can earn trust, build credit, and leverage that for loans and investments, all while being transparent and fair. This also prevents the exploiters from the old financial system from continuing their games in this new model. So, to sum it all up, mutual credit systems have their place, but without a store of value, they hit a ceiling. They struggle with trust, scalability, and trade imbalances. Moral money solves these problems by introducing real-world assets, decentralized trust mechanisms, and liquidity from external sources, all while keeping the system fair, transparent, and decentralized. It's a financial system designed for the future, but built on the lessons of the past. Thanks for tuning into today's episode of Moral Money, where we explore how to build a better, fairer economy for everyone. Stay tuned for more insights, and don't forget to subscribe to our podcast.